2021 has been a year of ups and downs for Bitcoin. The cryptocurrency fell almost 50% in just over a month after hitting an all-time high of nearly $65,000 in April. For investors looking to take cover from the volatility, but who still want to be invested in the cryptocurrency space, one idea is to look at the underlying technology which powers every cryptocurrency. And that is blockchain.
Bitcoin is a speculative asset. We hesitate to even use the word assets. You can watch the volatile price tells you how speculative this asset is. That's not an investment, that's a speculation. Blockchain's potential to transform industries is real. That's what we want a piece of.
Blockchain is a system of recording information that is duplicated and distributed across a peer-to-peer network. The distributed ledger technology has the potential to revolutionize a broad range of industries beyond just the finance space.
Often for a lot of companies, we talk about Bitcoin and cryptocurrencies, but it's important to understand there's also a lot of benefits with blockchain technology itself. For example, for many companies who may be looking at traceability, for example, if you're in the food industry and you can enable to your customers to be able to check independently that actually the food they're eating and they're buying actually comes from where the company says it comes from. When it comes to provenance, for example, today, when somebody wants to buy a piece of land or buy a house, we have to go to lawyers, notaries to try to prove that the land title is actually real. A distributed ledger technology be able to guarantee that the asset is actually owned by that person directly without the need of all these intermediaries.
Investors definitely should get exposure into blockchain because this is really kind of the new industry that is evolving with a lot of high growth potential. And of course, there's a lot of applications of blockchain technology that touches a lot of different industry, everything from supply chain to finance to agriculture. So it touches on a whole different facet of industries that we kind of live in.
Blockchain could add some $1.7 trillion to the global economy by 2030. This means plenty of investment opportunities.
We've seen investors try to get access to the broader digital assets wave. For example, there's many of the Bitcoin miners are actually listed on the various stock exchanges around the world. Many have been trying to invest in actually some of the components, companies that produce some of the components involved in Bitcoin and digital assets mining, from the microprocessor to some of the mining machines themselves. And some of these crypto companies now have become listed companies as well.
You can actually sign up with Square or PayPal now, where you don't actually, buy the physical cryptocurrency, Bitcoin or Ethereum, but you can actually get a position from these platforms. And also you can look at MicroStrategies in the US, where they're actually heavily invested in the underlying asset of Bitcoin. Buying into their stock effectively gives you that exposure as a proxy. ETFs in Canada that's coming out as well. And also there's GBTC, which is actually the largest kind of proxy ETF in the US. Grayscale Bitcoin Trust has been around for a while.
In a research note, Goldman Sachs compiled a list of 19 stocks with cryptocurrency exposure. These stocks outperformed the S&P 500 in the first 4 months of the year. They rose 46% in the period, 34 percentage points more than the S&P. In the same period, the price of Bitcoin went up by 89%. Companies on the list have a market capitalization of at least $1 billion and include banks, crypto mining, semiconductor, and software and services firms. However, research outfit Nanalyze believes that Goldman's list may not be the most optimal for investors looking at pure play blockchain and cryptocurrency exposure.
The list seems a bit forced, right? You have names like Facebook, Nvidia, right? These seem quite forced in that it's very difficult to make the case that these have any sort of pure play exposure to blockchain. Other companies on there, they listed things like JP Morgan, a number of other Visa, MasterCard, a number of other large financial institutions. And I think these are blockchain stocks in the same way that you could argue Amazon's a robotics stock, right? Out of the 19 stocks, 7 would be considered pure play. And one of 2 companies on their list that we thought were worth taking a look at. One would be Coinbase. The other was a company called Silvergate Capital.
Whether you're looking at getting direct exposure to cryptocurrencies or the broader blockchain sector, you must first be aware of the risks involved.
The reality is actually investing directly in the cryptocurrencies and broader digital assets is probably the most effective. And if you're not comfortable buying the cryptocurrencies directly, they can do it via a multitude of products that are available in the market, from ETFs to funds and companies invest in digital asset space. For other investors who are looking at investing, getting exposure to the broader asset class, blockchain and fintech more broadly, yes, there's a number of now fintech and blockchain related companies that are available, but those are often indirect exposure.
Investors really need to do their due diligence and really understand what they're really kind of investing in. But yes, like the internet age and what now we're seeing with the blockchain age, there is definitely, it's definitely a high growth sector, but again, also high risks.